you can force there's so many things to make so much more money on real estate.
You can end up, over time, you will end up having infinite returns in your property, because eventually over time, whether it takes 5 years, 10 years, or 2 years to get enough appreciation to pull all your equity out, you're going to have $0 left in that property. So any returns are now infinite. And you take your capital and you go buy another one. So you can scale real estate.
On today's podcast, we are going to be talking about real estate versus stocks. And
yeah, I'm gonna play devil's advocate here a little bit, Dan, because I know that you hate stocks and investing.
There goes with the hating stocks.
You do.
Again,
I know you're gonna try to deny it, but you do.
All right.
So you have a pretty big portfolio of real estate. How many stocks do you own? How many shares do you own?
I literally own zero.
Like, and why? Zero. Okay, so let me ask you, why do you not own any shares of any company? Give me your honest opinion of the stock market as a whole. Obviously, there's some stuff going on with Bitcoin right now.
So here's my actual issue with it. Not even an issue. I don't even have an issue. You're fucking bullshitting everybody right now. No. It's not even an issue. A severe issue now. So my whole thing is my whole issue, if Scott wants to call it that. I like when I have control over my finances. I like when I have control over the narrative of whatever I'm doing. And I truly just don't feel like I do. In terms of the stock market.
If you're buying some company, right, you have very little control on how that company is run. I understand.
And here's another thing too that I have a problem with, and this is very much more so myself, like based off of myself, not necessarily the stock market as a whole, because I truly don't actually know enough about the stock market to really actually have.
I'm gonna educate you.
I really don't. Yeah, I really actually don't have enough of an educated opinion on the stock market to really. Come at people with like really hard facts. Yeah. Okay. Yeah. Now, but from my perspective, I actually just don't even have enough time to vet things in the stock market. So as an example, like, a lot of people will say, oh, well, why don't you just get into like, and people have asked me this, why don't you just like buy blue chip stocks, right? With a great dividend and all this kind of stuff. And I'm like, well, because I'm going to make more money in real estate. So why would I put my money into a blue chip stock and make less money and not even be able to leverage it? Like, it makes no sense to me, right? Yeah. So from that perspective, so with regards to that, with not number one, having the time to research stocks that will produce better gains in real estate, I don't have a time for that.
Very hard to do anyways.
And it's very hard to do regardless. Yeah. And then number two, I don't have the control that I typically do over the real estate market. So from that perspective,
it sounds like you have a hard time investing in a company that you don't have control of, 100%. And that's unlikely going to produce the same returns that the real estate market will produce, which I agree with.
Yeah, and
I'm not here to argue for stocks in favor of real estate. In fact, I'll say the opposite every time, right? But I will argue that in a lot of situations, it does make sense to have a stock portfolio for a number of reasons. Number one, do you invest in RSPs, for instance?
No.
You don't have any RSPs. No. So you're a high income guy. Many high income earners will use RSPs as a tax advantage account. So myself last year, to reduce my taxable income, I put a bunch of money into RSPs. When that money's in an RSP account, I have the option of A, leaving it sitting in cash, B, like buying some bonds or some low risk investment, low return as well, or investing it myself in something that I think is going to return at least a decent investment.
Yeah.
Right?
So let me refute that. On paper, I don't make enough money to make
that's a good point too.
That a factor.
Yeah. You're hiding your income in corporations 100%. And you're only declaring a certain amount.
So for me to like have to reduce my income, it doesn't make fucking sense. It's not a factor. Yeah. So, and not only that, for me, the return that I'm going to get in an RSP, or even if I put it in the stock market, still, we just go back to number 1 and 2.
Yeah.
Right? Like I would actually rather just have that money so that I can, number 1, leverage it, and number 2, put it in something I know is going to make more money.
100%. Yeah.
That's it.
Yeah. And if it wasn't
any business I've ever started, like I've started like little like bullshit things here and there, almost every single business I've ever started, whenever I've put my money into something a little bit, I have made more money than the typical stock market game over time.
100%. So what would you consider to be the typical stock market gain over time?
I don't know. I don't even know.
Per year.
I can't remember. Like, I
think a good return is like 7 to 10%. Like that's good.
That's what I was going to say, 10%. That's like a double digit, low double digit return. Like when I do like little things here and there, like even if it's like loaning money, right? Like private mortgages, I'll still make 15%. And get my full, like, and then it's also leverage. Like I could do, there's so many other things that I could do with that. And then it's also not a scenario where it's like, even if I'm doing that, it's also not a scenario where it's like, well, if the stock market dips, I'm out 30% of my money. No, there's still an asset there.
For sure.
That I actually vetted myself and I understand.
Let's break this down into two arguments. Yeah. Okay, so right now, I think our argument's going down the path of, well, real estate's just better. We both agree on that. And in our next part of this podcast, we will get into why real estate's better. And the argument is clear. But I want to make an argument for stocks.
Sure.
Not in favor of real estate, but just for stocks. Number one, the passivity. I can log into my account right now and buy shares of great companies that I know you have a hard time with this, and I agree to a certain extent, but you have to understand if you were to liquidate your business right now or to sell shares of your business, there is a way to value your business, right? Price to sales ratio, taking all the assets and lumping them in, projecting future sales. Like there's going to be a market value to your business. The only difference of your business is you're not trading it publicly, right? Your business isn't on the stock market, the NASDAQ, but you could theoretically put it there, right?
I could, yeah. Now, I've been asked actually to do it.
And that's the thing. There is a true value to your business that professional people can find based on certain metrics. The same goes for the stock market. If I want to buy shares of Google, Facebook, Amazon, Netflix, Tesla, any other company, there is a market value to those companies that can be found. Number two, you don't like not having control. I understand that as well. But guess what? I do like having Jeff Bezos in control of Amazon. He's going to do a better job than me. Elon Musk is going to do a better job than me. But like some of these leaders are really great leaders. Warren Buffett, these types of people. I'm willing to bet on those people. And when you understand the stock market from that perspective, you own a piece of that company that does have a market value and you're trusting. Like if I was to invest in one of your companies, Dan, I would be betting on you. And I'd be willing to do that because I see that you're a good businessman. So you can evaluate leadership and business control as well and make an educated decision. Now, here's one of the problems that I think a lot of people that don't do stocks and maybe don't have I'm not saying you don't have the emotional capacity for it. I just don't think you care. And I understand why. But when we see 30% dips in the stock market, that doesn't bother me. Like you think that it doesn't bother, it used to. It doesn't bother me anymore. That's now a buying opportunity to me. But I think a lot of people look at that like, oh my God, you can lose 30% of your money in like just like that because the stock market's so liquid.
The only reason why I bring that up is because everything in this world is all relative, right? So if you take $100,000 and you put it in the stock market, or you take $100,000 and say, for example, give someone a private mortgage for a house or whatever, 100,000 obviously light or whatever. But at the end of the day, if you give $100,000 to someone, the real estate market takes a dip for 30%, or the stock market takes a dip for 30%, I would rather be in the position of actually having collateral on
Understandable, but guess
that's
what?
That's the only thing.
But you have to look at it this way. I don't mind having a 30% stock in Amazon because they are dominating the world. And I don't care if it dips 30% over the next 20 years. Just like real estate, I know Amazon's going to make more money in 30 years than they are now. They are like in a lot of areas of business, and I'm willing to make that bet. So I think I still would rather have real estate, but like I'm comfortable with a 30% dip in Amazon stock.
I agree.
Or Google. Like they're basically monopolies, right?
Yeah.
Now, what I don't like doing, what most people do, is they don't really invest on fundamentals. And the stock market is becoming more and more of a casino because it's so accessible. Most people are no longer evaluating businesses on anything. Like people are buying stocks not on fundamentals anymore. Because of Wealthsimple, I can go on and just buy a stock on my phone
Are they actually
on a
changing
Tuesday.
it that much?
Well, it's just so easy.
The same kind of thing, right? Yeah.
It's accessible. If you go to sell your house right now, it's not that easy, right? The housing market isn't liquid. Elon Musk isn't going to tweet something that's going to get me to sell my personal residence or if I'm renting, I'm not going to move out and go live on the streets, right? Like it's nothing can impact that.
Yeah.
So I like the illiquidity of the real estate market. It prevents those big dips, although those big dips no longer bother me.
And those big dips,
look forward to them.
Those big dips are rarely as big as the market.
Not even close.
Not even close.
But if you have the emotional capacity to not give a damn about those dips, like I own a very small amount of Bitcoin, like $3,000 worth of Bitcoin. do you think this dip bothers me at all? It doesn't. I don't in fact,
probably
like
buy more.
Yeah, it's just like, okay, right. Like I've made up my mind. I'm going to make this bet. It's an educated bet in my opinion. If I'm right, I'm right. If I'm wrong, I'm wrong. No problem.
I got a funny story about.
I'm not over leveraging myself and Bitcoin, right?
I got a funny story about all that shit right now. So Dave, we accept like crypto on Canadian Protein, right? So when did that all happen? That whole like where
within a week,
it would like dipped like 36% or something like that in like one shot because of one tweet.
Yeah,
it was like over like
this week. I don't know what.
So literally, what was it like the day before or like even hours before that actually happened? Somebody bought like a $1,500 order on Canadian Protein. They bought it with using Litecoin because we accept Litecoin as well. And Litecoin, like I think their order was like legitimately $1,400, and I think the amount of this was the first Litecoin order that we have ever gotten on the site. Nobody the majority of people are using Ethereum and Bitcoin, right? So this was the first Litecoin thing. So
Asscoin.
Yeah. So I could see like how much Litecoin we have, and we never had any Litecoin prior. So I can see how much it took a shit, and it was like it went from like. Actually, I think it was like around 1362. It's now at like 944. Something
so they
like
paid
that.
for it right before it crashed.
Right before.
Now,
like
what's your theory on that? Do you think there's some
know.
inside info or something? Because it's possible.
I don't know. I don't know.
Could be.
And here's
Stuff
the thing too. Like
from
my perspective, it's a new thing. I think it's fresh. I think it's like prudent for us to actually accept that kind of currency or that kind of payment. And I do think, hey, like there is obviously something here. There's something here. I don't know enough about it to like start like putting a lot of money of my own into that.
I don't recommend anybody do that really.
But at the end of the day, I'm actually not cashing out on the crypto on the site. I'm not. I don't actually plan on really cashing out until it starts like really rolling and picking up. Like, so I have to like actually pay for stuff for the company if it gets to that point. But like, I'll let it just sit there. Yeah, because I actually think it's going to. It's going to do. It is, an investment to some extent.
It's an investment, and I look at it just like real estate. I make educated bets.
I like it more than cash. That's for sure. Like actual currency.
That's a good point.
So that's why I'm actually not too keen on like actually cashing it out right now. To have the cash,
it's a lot easier to print money than it is to make another Bitcoin.
Yeah, exactly. So, and that's my perspective, right? Even though like. I'm still of the mindset, and we've talked about this. I could be wrong. I think there are still people pulling the strings behind the cryptocurrency world.
There are in every market, though. Even with Amazon stock, people are trading it. So I know that I can't compete in that game. Yeah. That's why I invest for the long term.
So, but I know the currency manipulation is just to a greater extent.
That's a good point. Yeah,
that's the only problem. The currency and what's going on in the world right now is really. Like even
so crypto relative to the dollar
100%
is just probably a safer bet.
Fuck me, almost anything relative to the dollar at this point. You know what I mean? Any existing good, really.
Even
every day that goes by, you're just spending more money. I actually came across, on this topic here. We're getting a little bit off topic on the whole podcast, but on this topic, I came across remember that I tagged you in that Facebook thing? Did you see that one guy's post talking about like? You should just save until the market crashes and you'll be in a better position to buy. And I'm like, motherfucker, this guy has no clue what's going on right now.
Don't take advice from guys
because like your money, like even as you save, you're like, number one, you're going to be more than likely saving in the bank. And what's your bank give you? 0.2%,
pretty much zero,
like 1%, even at max in the best savings account. Like you're losing so much money keeping your currency and keeping your money in the bank. It's like unbelievable. So this guy's advice was like just like completely out the fucking window.
And by the way, Canada just announced their inflation numbers for the last quarter. I think it was like 3.5 to 3.7%.
That's not even accurate.
Which is not accurate. That's below. No. Yeah. It was above what they anticipated, which was 2.
Yeah.
But I guarantee you it's below reality because like 100%. I said, that's core.
That's obviously
inflation.
Core inflation based off what?
Milk, cheese, and eggs, and stuff like that, right?
Yeah,
like
bread.
Nobody cares. But
Meanwhile, do people buy that shit even anymore? Everybody's all on fucking vegan diets and shit. Like,
people are getting poor.
No carbs. Like people don't even buy that shit no more.
Yeah. So, okay. Back to our debate here. What else?
So here, I was actually thinking about actually playing the stock market, like putting like maybe 5,000 into like 5 companies just so that I can like show people like what I'm doing and what companies that I've picked. I was actually going to do it.
What would you have picked? Any rough idea?
At that point in time, oh dude, I don't remember. Okay, so I was going to pick Air Canada. So for me, like this is my perspective. For me, I like to more, so if I'm going to do the stock market, I want big fucking gains, because if I can't leverage my gains, I'm going to take a bigger risk to get more money. And if I lose, then fine. But I was going to do Air Canada. I was going to do real estate investment trusts that only hold grocery stores. And then I was going to do, I don't remember what else I was going to do. Something else that took a hit and I truly felt that was coming back. I don't remember what it was.
Blockbuster?
I think it was actually a couple grocery stores, because right when COVID popped off, the grocery store market took a hit, and I knew like what people just not going to eat. So obviously, it was artificially.
A lot of stuff. Yeah. A lot of opportunities are created when those crashes happen, because everything gets smoked.
Yeah, and let's be honest, Air Canada has a monopoly in Canada. It's not like people won't be flying anymore.
And with our socialist government, they always support those industries 100%. Because they can't let them go belly up.
So from that perspective, that's why I picked Air Canada. Because it might be even a couple year play. I don't know, but at the end of the day, I know Air Canada is coming back, and they're going to come back with a fucking vengeance, because when this shit all opens up and people are like doing whatever, like. It's going to be like the fucking roaring 20s.
People are going to go nuts.
Yeah, people are going to go nuts. Like people are already booking out. Like I talked to multiple people. They're booking like cruises in 2023. Like I've never even heard that before.
Yeah.
You know, like not from like regular people.
Yeah. So I actually like your mindset in a lot of those ideas, right? It's not, the stock market's not that complicated.
Yeah.
Just like real estate, we overcomplicate it. Here's an idea. Buy oligopoly Canadian banks and just hold them. They print money.
Yeah.
They're tied in with the government. There's only 5 of them.
Yeah.
They make, how much money do we pay them in mortgage payments every month?
Yeah. Like they're not going anywhere.
Yeah, they can't go anywhere. They're the backbone of our economy. So I own Canadian banks. I own the best companies in the world that make the most money. Amazon, Facebook, Google, Netflix.
Yeah.
You can see what's happening in the world. Like you think you don't feel comfortable owning Amazon stock.
Yeah.
But people are stupid because they're like, oh, that's $3,000 a share. I can make more money if the shares are only $20 a share. And it's like, no, you don't understand.
Yeah, it doesn't matter.
That's not how it works at all.
The number value of the shares doesn't matter.
The amount of people that just don't get that is
so for my
insane.
and again, from my perspective too, like when I say I can make more money in the real estate market, it comes from a perspective of like if I'm spending like $100,000 on a property, I'm getting $400,000 worth of value.
Let's save that. Let's save that for the next segment, because we're gonna then.
Okay.
So a couple more things I just want to point out about stocks. Okay.
Yeah.
The TFSA makes stock investing pretty advantageous, right? Mm-hmm. You can invest in a tax-free savings account. Any gains that you make are tax-free. So if you double your money in the real estate market, 50% of it capital gains, blah, 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 for an investment property in your TFSA, tax-free, I think that can be pretty powerful. It's more liquid, easier to access, and takes less time, right? I can just buy something and forget about it for 20 years. I don't have tenants calling me. I don't have anybody messaging me. And then the RSP offers some tax advantages as well.
And that might be a perfect investment for a lot of people, because a lot of people just can't even stomach owning real estate.
Yeah,
right?
well, if you can't stomach owning real estate, you shouldn't be able to stomach owning stocks, because stocks are a lot more volatile than real estate.
What I more so mean is like when you're saying, a tenant trying to call you and like stupid shit. Like I have stupid shit happen all the time.
For sure.
I don't deal with it personally anymore, but at the end of the day, when I was starting, I would deal with it like non-fucking stop, right? But nonetheless, some people
it scares some people, that phone call.
It truly does, right? Or like, my uncle. Like I remember him, even before I even got into this, I was like right out of high school even. He was like, oh my God, like you want to get into real estate? Like I had a rental, and he's like, I couldn't even like deal with it. It was like a nightmare. And I'm like, well, why was it a nightmare? And he was like, oh my God, like, this one time, the toilet overflowed. And I'm like,
it doesn't
like,
sound
that's not even like
nightmare.
a big, like, what are you talking about?
I tell you about the time Elon Musk tweeted and dropped me 40% of my portfolio, right?
Yeah.
So
you
have to.
And I know people too that are like nonstop. Here's the thing too. Like for me, I'd probably be one of those guys that would like be like nonstop on his phone. like watching, and I can't do that. I just can't.
Yeah, I started out that way. It doesn't help you. That's the problem. That's the blessing and the curse of the stock market is it's liquid and it's easy accessible, but it also is volatile. So I no longer look at things. I buy stocks the same way I buy real estate. I buy it for 20 years. I try to predict this company's future over the next 20 years. I don't care what happens in the meantime. I don't care about the Bitcoin crash. There was a tech crash a couple months ago. I own a lot of most of my stocks are in tech because that's the future. And somebody said to me, like, this tech stocks crashed. I'm like, oh, they did? I didn't even know. Like, I'm too busy to even know.
Yeah.
And I don't care, right? Like, I'm not buying it for 6 months, but people are panicking and blah, blah, blah. So that wraps up. I like stocks. I think it belongs in a lot of people's portfolio, but let's get into why.
And here's the thing too, hold on. Let me just I'm not saying I won't ever own them.
Right.
Right now, for me, it's not in the cards, and then we're going to segue into why I don't feel they're in the cards necessarily for me right now.
How much time do you got? Where do we start, right?
Yeah.
Let's start with that. People need to understand this, especially beginners. You need to understand leverage. And once this clicks for you, like I'll tell you what, once I understood leverage, it's easy. It's an easy concept to like think about, but to really understand it, I think is a little bit harder than people think. But once I understood leverage, it was like, why am I even invested in stocks? To a certain extent, right? If it wasn't for the RRSP and the TFSA and the fact that I just like it, I'd probably have $0 in stocks because in real estate, you just mentioned it, you get 5-to-1 leverage on any purchase because you're only putting 20% down.
Yeah, 4 or 5, yeah.
Now let's break that down a little bit further.
Yeah.
Understanding leverage, when you have 5-to-1 leverage, if the real estate market goes up 3% on a $100,000 property, that's $3,000. In your $100,000 property is now worth 103, but you only put 20% down, so you're only into it for 20 grand. So that 3% gain is actually times 5, so it's actually 15% gain on your money because you only put down $20,000.
Yeah,
$3,000 on 20,000 is 15%. Yeah. So you're getting leveraged returns. You get risk-adjusted leveraged returns because real estate is very low risk, right? If you want to get leverage in the stock market, you have to basically do some really risky things. You have to borrow naked puts and like all these things where you're really exposing yourself to like losing everything.
Yeah.
In real estate, like how can real estate go to zero? It's just, it can't happen with inflation and building costs and replacement costs and the fact that it's one of the Maslow's hierarchy of needs. Like it's literally a human need is shelter. You don't have that level of risk of something going to zero.
Yeah.
So understanding leverage is the most important thing for me. Once that clicks for you, you won't probably want to really buy any other asset class.
Yeah. And that's actually why I don't have a lot of money, any money really, tied up in the stock market because I am focused on growing my portfolio. So every dollar I don't that I invest in the stock market is
it's 1-to-1.
It's
you get a 1-to-1 ratio.
It's $4 that I'm losing out on, right?
It's a good point. So that's another way of looking at it.
That's the problem, right? Like no matter the return or whatever, like again, and I'm making more returns on real estate, not even considering appreciation, leverage returns, like not even considering that stuff, right? So if the average stock market gain is like, 10%, a lot of my properties are making 10% cash flow, not even
plus
considering
appreciation, plus principal pay down,
plus
the tax advantages,
plus all that
real
shit,
estate.
All of that shit. So it's not even close.
And
I'm not going to sit here and pretend to be like some fucking Rain Man where I'm going to go into like the real estate market and be like, oh, I'm going to be getting like 20-25%. Like I don't know, like, or the stock market, yeah. So that's not going to happen. I don't know enough about it, right? I can make all the educated guesses that I want, but at the end of the day, I don't know enough about it.
And if I think about it, like the average property for me, when you take appreciation, principal pay down, and cash flow, it's got to be over 25% ROI.
It is, yeah.
Almost, especially with what's happening right now is an aberration, right? It's way above average appreciation, which is skewing the numbers. But even without that, even if it was just simply 3 to 5% appreciation per year in Canada, which is pretty average, the numbers would still be 30 to 35% return on investment annually.
Like total return, yeah.
Total return on investment.
So you and I were looking at, I ended up screenshotting you something. So Scott, I was looking at something outside of Orlando. It's like it's a senior community, and total ROI over 5 years. Let well, actually the annualized ROI each year is like 93%.
With principal pay down,
principal pay down, cash on cash, appreciation at 3%.
That's
per
insane.
year,
and
93 fucking percent.
Yeah.
That's actually even if there's like no upside in the market. If there's any upside and the cap rate changes by 1% and goes down by 1%, it's 126%. Like what the fuck?
Yeah.
That to
good
me
luck
is
getting that in the stock market without doing some really risky.
And the crazy thing is too is like even these hedge funds, they still even produce they don't produce that.
Oh no,
you know what I mean? No. Like so I don't understand. I could be wrong. I don't fucking know, but I'm pretty sure they don't produce gains like that either, right?
And that's the and that's the key to real estate. So why else do we love real estate over the stock market?
I also like the pride of ownership thing. I'm not going to sit here and lie and say like I don't like when I drive by place and I'm like I own that, Same. I own this, I own that, I own some stuff in here.
A physical hard asset that cool. you control.
Yeah,
you can improve. You can manage it better. You can get better tenants. You can take this dilapidated property and make it into something better.
Yeah, and the control. I have control. I know what to do. The bad thing is if you don't know what to do, you could really get fucked, right? So I guess that like you were saying, that is an advantage to the stock market. If you're not like super savvy with like owning a business or running whatever, or you're not a control freak, then you give it you hand over the keys to Bezos or fucking
definitely.
Whatever.
And that's cool. Now here's the thing as well. I like to think about. There could be a new phone that comes and wipes out Apple. Mm-hmm. I don't see it on the horizon, but there could be a new technology that really starts the decline of some of these companies.
Or what happens?
Tell me of a new technology that's going to replace real estate. Or a new product that's going to replace your personal residence, the place where you live and call home.
Yeah, exactly. So that's another reason. And like I was going to say, a couple things that I just don't care for is, Bezos and all these guys are like super strong leaders and they're super smart. But like you sometimes you don't know what's going on in the background. Like you really don't. Like there could be a black swan event in like Bezos's life that's coming and people just don't know about it. Mm-hmm. And it could really affect things. I don't know.
It could be a black swan at the company too.
It really could.
It doesn't happen super often, right? No. The Norelcos and these companies where they're just lying, or fudging numbers or the numbers look great. Yeah. And also with the stock market the way it is now and so many amateurs in the game, right? Like 20-year-old kids that are buying stocks not on fundamentals. You're a lot of times you're buying stocks that are way above their actual market value. Or you're buying companies that are historically at premium valuations, which exposes you to excess risk. Yeah. Now, could you make the same argument for real estate? I don't know. The problem for real estate is that the replacement cost has gone up so much.
In those premium locations especially.
In the premium locations. And in Ontario, every location. But in particular, the premium ones. And also the government, you can clearly see what they're doing. They're letting in 400,000 people a year in the middle of a housing crisis. So, you can make that argument to a certain extent, but it's not the same as some of these stocks.
I'm owning premium real estate every fucking day over premium stocks. Yeah, every fucking day.
For the leveraged returns.
The leveraged return and just
and the ownership.
And the control and like all that kind of shit.
And the fact that it's on the hierarchy of human needs.
100%.
There is no product that replace it. Yeah. There is no... I guess you could fear the black swan event in real estate, just like any market.
The black swan event, would you consider the mortgage crisis in 2008 a black swan event?
I would.
I don't know.
You know what? It's a good question. Here's the thing. When I don't know because I didn't have any sort of mindset at the time. So I don't want to go back and say, I would have seen this coming. Yeah. All I know is that
nobody really did. That's the problem.
A very small number of people.
I'm pretty sure there was one guy that actually saw it in an algorithm or something like that happened. So I don't know, or even call it hundreds of people saw it.
But here's the thing. Data didn't tell us what was happening, right? No. But I think subjectively, if we were in those markets, maybe if we were in a Florida or something like that and we were looking to invest, and if we did a little bit of research and saw that, hey, this guy, these mansions are selling for $300,000 and this guy that works at McDonald's just bought the house. That doesn't add up. Maybe we could have anecdotally seen it.
That's what I mean.
But the data wasn't pointing out to it.
I think the banks would know. The underwriters would have known.
You'd think.
Right?
Yeah.
But at the same time too,
The law, I mean, the banking regulations were too loose. That was the problem. So they might have known it and they weren't telling anybody. So the average person didn't know. Exactly. The only way you would know that something was off is if you anecdotally did your own research, which is what these guys did. If you watch that movie, The Big Short or whatever it was, they drove to Florida and they were talking to people.
Is that right?
And they went to like a strip club and she's like, oh, this mansion is my third house. And they're like, okay, we were right. Just like when we went to Coral Springs, we went and talked to the police officer. Yeah. And we were like, okay, tell us about this community. And when we drove it, we're like, this is a beautiful community. We think that the market's blowing up. We think people are moving here from all over the U.S. We talked to the cop. What did he tell us? Nothing bad happens in this community. People are moving here in droves. We're starting to see multiple offers. Like he's like, we just had multiple offers on my house. Yeah. And we're like, we looked at each other like, we're right. Yeah. But they did the same thing anecdotally that we just did anecdotally, right? So. The only way I guess
seen that movie, by the way, I got to watch it though.
Yeah, it's pretty interesting. But
it's based off that, right? That time
it's based off 09. They found a way to profit off of it. So but a lot of risky stuff was going on.
So maybe it is a black swan event. I don't know.
Depends how you define black swan.
Or whatever. It's some fucking color swan. Yeah. So who gives a fuck if it's black or not?
Well, I would say a black swan event is where most people don't see it coming. And my recommendation is, don't try to predict black swan events. You know how many people are still doing that right now, and they've been doing it for a decade straight?
I see all the time on
the government's going to do X, Y, and Z, and then that's going to crash. They think they know what's going to happen, and then they're going to raise interest rates to 6 or 7%, and then that's going to crash the market.
These people, and like unfortunately, it's a lot of people that actually can't afford to buy right now are calling for it or think that this is going to happen, and really
they subconsciously want it to happen.
Of course, and that's what it's coming from. Yeah. They want it to happen so that they can then afford a house. But what they don't actually realize is, even if that one post that I was referring to, or there's a couple comments saying like, oh well, it looks like something's going to be happening in Q4 of 2021, and I'm like, if something happens in Q4 2021 and you wait till then, the shit's going to be $100,000 higher, and maybe it dips 20%. So you're fucked. Like, what are you doing?
You're screwed either way.
You might as well just buy now, because right now it's on sale, comparatively speaking, in 8 months.
To what it's going to be. Exactly. Because of the fundamentals of the market.
And even if shit hits the fan in Q4, what do you think is going to happen? Mm-hmm. We're not going to see a 30% dip.
What's the worst case scenario?
That's not going to happen here.
So first of all, you're probably wrong. You're probably wrong, and nothing's going to happen in Q4. You don't know what's going to happen. Your biggest mistake is the fact that you're trying to predict it. That's number one. Number two, the reason you're trying to do that is to justify your own incompetence, your own aversion to risk, and the fact that prices have gone up so much and you've partaken in none of it.
You just don't even want to deal. You don't even want to believe it.
You can't. Yeah, you don't want to believe it. You want to believe that you're right and everybody else is wrong. And it's really like an insecurity. It's a cover up for your own flawed analysis of what's happening in the market. 100%. And also, it's fundamentally illogical. Mm-hmm. I always like to say I don't consider myself an optimist or a pessimist. I consider myself a realist. I like to look at what's actually happening right now, and then try to make educated decisions based on that. And it's so simple, like Occam's razor. There are not enough houses. Building costs are rising. The government continues to pour in immigrants into the country. Our banking system is super tight. It's hard to get qualified for a mortgage. They have a stress test of 5.25%. I was just going to say that too.
People don't actually realize like that these people, like they think the problem is these people think that they're getting qualified based off mortgages at under 2%. That's not happening.
No, they're qualifying you at 2 percentage points higher than like the posted rate.
Exactly.
Or what the bank is offering, whichever is higher, which is always the posted rate. Yeah. And it ends up being 4.75 to 5. It's about to be 5.25%, if I understand correctly. Yeah. So that means they have to raise rates 150% from where they are now to get to that place where people would stop being able to afford their mortgages. Yeah. Now, here's the thing. Do you think that the government is going to do that? Like, do you actually think they're going to say, okay, we're going to 6.5% like that. We're going to crash the housing market. We want everybody poor. We want everybody. Like, you think the government wants that?
No, nobody wants that on their watch.
Now, it's possible. I'm not going to say it's not possible, but if I'm a betting man, which one are you going to bet on? You think the government's going to keep the train going like they historically do?
That's not a black swan event. Like that, I don't think.
No, you know what? That's a good point too.
It's not. It wouldn't happen overnight. Yeah. That's why the government would not raise rates. You would see it coming.
It would be black swan if it happened at such a pace or in one fell swoop, which is unlikely, right?
That doesn't happen.
It doesn't happen, and that's what people don't understand. It would be slow.
I'm not gonna. I shouldn't say. We shouldn't say it hasn't happened. I don't know. Actually, to be quite honest, I don't think it's happened. Yeah. And I'm sure. I would bet everything, I would almost be certain that would never come at this point.
If you were to predict that the government's going to go to a sudden increase in rates that crashes the economy, then yes, it would be a black swan event. But I would say that you're stupid for thinking that they're going to do that.
They'd have to do that, or like they would have to go hit 5% and like an increase
super rapidly.
Now, now, boom, done. Here's an
what
increase,
boom. And what they would do if they did that, they would crash the banks. Like everybody would be against them. All the powers that be would then come crashing down on the government for crashing the economy intentionally. Everybody knows what would happen.
Yeah.
The governments and the banks are one. They're tied in with each other. You think the banks want to own all this real estate that goes into foreclosure? Because that's what would happen.
100%.
They would own it all.
They don't want to be a landlord.
No, it would be a nightmare. And they would, whatever. So anyways, it's possible, but I'm going to bet that doesn't happen. Mm-hmm. So that's why, like, if you just think logically, you can operate even when the market's skyrocketing. Keep in mind, the market was skyrocketing 5 years ago. When prices went from 150 to 2, people thought it was crazy. 250 to 250, that's crazy. 250 to 3, that's crazy. 3, and the whole time I'm just thinking logically. And I'm not optimistic, I'm not pessimistic. I'm just looking at what's really happening in the market right now, and I'm just making educated bets. But people the whole time have been trying to predict black swan events, rising interest rates, this problem, that problem, like this, or they just have an emotional reaction to rising prices that just simply isn't logical, which prevents you from buying the safest asset class in the world, which is real estate.
Yeah. It makes themselves feel better too.
Yeah.
Just like when, like, even like the hater comments and all that stuff, it's the same reason.
Definitely, man.
It's the same shit. Like it makes themselves feel better that people feel better if they refer to stuff like that, because what ends up happening is when they're talking about like a real estate crash, they're hopeful that they'll be able to own something at that point.
And this includes investors, not just end users.
Yeah, exactly. And in reality, what they're actually doing is they're preventing their opportunities from happening currently, because they're hoping for something. Yeah.
And when that crash does come. It's
just the wrong mentality. It's just totally the wrong mentality.
And like we always talk about, if and when that crash does come, those same people will not suddenly be the Warren Buffetts and the Donald Trumps of the real estate market coming in and soaking up all the supply and just dominating the market. They're not going to do anything then either, because then they're going to be just as scared, right? Right now, they're afraid that the market's crashing. When the market's crashing, they're going to be afraid because the market's crashing. And then it's going to start going up, and they're going to be afraid that they missed it. And it's just going to be fear packaged in a new form. And they'll just continue to do nothing 100%. Like they've done for 20 years.
Yeah. So I mean, how many people we know that have been talking about buying real estate for 10 years? And if they would have bought when they were going to say they were, and they weren't complaining about the fucking prices going up, and this shit wasn't too much, and this wasn't it. And here I am. I'm like overpaying by $5,000 just to get the deal done because I fucking know what's happening.
Yeah,
I'm not stupid.
Pretty clear. Logic prevails over prediction of crazy black swan events.
For sure.
And the stuff that people are getting a little bit weird right now with all the stuff that's going on. I understand, but typically they're taking these extreme positions and making bets on like really far extreme
like what
things. Like, well, for instance, interest rates.
Okay.
And what people don't understand is that I think the mortgage payment right now, percentage-wise, is similar to what it was when rates were 17%, right? Because when rates are 17%, asset values just go down, and it's the same thing.
Yeah.
The mortgage payment as a percentage of your income ends up being very similar because asset prices adjust for interest rates.
That's what somebody said too. Like, what happens when we see rates, like the late 80s? And I'm like, what are you fucking talking about? You know what it would take? Like, that'll be the last thing I'm worried about is fucking real estate values. Yeah, and if the rates are fucking in the teens. Like, are you kidding me?
What people don't understand is they're predicting the previous crisis, which is high interest rates. We're in the middle of a crisis right now.
For sure.
But the crisis is we don't have enough houses.
Yeah.
The government doesn't understand the housing market. They're screwing it up left, right, and center. It's out of control, but it's out of control to the upside. And if you understand that crisis, you could have profited off it the whole time. Maybe the crisis when interest rates were 17% is most people can't afford a mortgage. So you can buy heavy cash flowing assets for 40 grand. That's a very limited down payment. You can own a bunch of real estate with higher cash flow. You might not get as much appreciation, but you get more cash flow. There's always a way to play the market. That's why I don't really fear what happens.
Yeah.
Entrepreneurial, enterprising, investor-minded people will just adjust.
Yeah. The only thing that people need to recognize is not to be over leveraged. That's the only thing that that's the only thing that could really catch people.
Which is hard to do in Canada. It's not impossible, but it is hard to do. Like how could you give me a scenario in real estate where you could be over leveraged?
These fucking people that really promote private lending.
Gotcha.
That will do like
that's just stupid.
Yeah, they'll leverage the down payment.
Yeah, unless you're doing private money for temporary 4 to 6 months projects or some reason that's temporary and you understand the risk you're taking on and you're hedged for it.
Yeah.
But if you're
private money, the only place private money has is like you said, to get a project done. But if you're using private money to be able to afford something, that is not the answer. That is literally not the answer.
Love it.
The only other maybe option that I would say is if you don't qualify for a mortgage, but even then, like it's not going to take that much time to really like fix your credit.
But if you don't qualify for a mortgage, you can't even get a loan, right? Like how
I understand that, but that's typically where the private lending market plays, right?
And that's why we always preach, okay, you want to buy real estate, go get a job.
Yeah.
Get a raise, fix your credit, go to the bank.
The credit's a big thing, man. Like, because at the end of the day, like, when we have like around a $15, a $15 minimum wage, the affordability it was there. Like, I don't know where it's going now, but if you're making minimum wage in Canada, you can still afford some shit, especially in like outskirt markets and stuff like that. Like there's, I'm talking relative to our area, but a lot of times that I see, like, I'm heavy in private mortgages and all that stuff, or private lending. It's usually credit. That's usually what it is.
So they can't get a loan from the bank because of credit.
Because of credit, yeah. That's usually what it is.
You vet them, obviously, right?
Yeah, for sure. But what I mean is like, it's usually credit if it's not a project, okay? Gotcha, so I have loaned to people that wanted a mortgage just for themselves, but they were going through, say, for example, a divorce, or they had some fucked up credit card shit that they were actually like, in the midst of fixing, and you can see it. You could see that historical pain. Maybe your credit's affected for multiple years, right? So if they're showing a valiant effort for last year where they're not late on anything, you can see. But the banks still look at that, and it still affects your credit.
Definitely.
So that's what I'm trying to say. Like that's in a scenario that I would lend to. He's got a job. The person has a job, or he or she is actually working. Sometimes there might be like, I don't know exactly why divorces affect your credit, but there might be a scenario where it does. That's not a huge red flag to me, because the reality of it is some people get divorced, and that doesn't necessarily mean that they're bad people or they're not financially responsible. Mm-hmm. It just affects them. It was a
situation.
It was a situational kind of event,
not a trend that not a lifetime trend.
Exactly.
Of
and when you pull credit, you can see trends, right? If a trend is alarming, you don't do the deal. Yeah. If it's not alarming, you don't.
And here's the beauty of your private loans. What happens if they default?
I got their house.
You get the property.
Here's the thing. I don't get the property, so that's actually not the play. So what ends up happening is you can force a sale. It's a very gray area if you try to work out a deal for that person's house prior to actually having a sale or forcing a sale, because then they can go back and they can kind of start arguing like, oh, I felt pressured and this and that, and then you might end up with a lawsuit. Who knows, right? You don't want to get into that shit, but you can force a sale.
So they would technically still own the property.
Yeah.
So when you loan the money, are you just loaning the down payment, or are you buying the whole house?
No, down payment.
The down payment. So the bank.
No. What am I talking about? No, the whole house. Yeah.
So why would you not be the owner? So does it go in their name still?
Yeah.
They go. Okay. Yeah. So they're on title. So they own the house.
I'm registered.
You're the mortgagee.
Yeah, I'm a mortgagee. Yeah. So it works just like the bank.
You're the mortgagor.
Yeah, the mortgagor. Yeah. Well, I'm the lender. Whatever.
I'm the lender. Gotcha.
Yeah. So I'm the lender. Typically, I don't do any kind of private lending unless they have like 20% down. So there's a cushion there too, right? So if the market shits, then
another way to look at this as well is why do you think the banks are willing to lend you 20% LTV and sometimes 5, 10, 15%?
They're not doing that with stocks.
Yeah, it's for a very clear reason, because housing is the backbone of the country, economically and just in terms of our way of life. Like that's just we think it's one of our rights, right? Like to own a personal residence.
That's another thing that I was very taken back by in those comments. I always refer, like I actually scour Facebook now, kind of like to see like just the
you don't say.
The narrative of how people are actually thinking, right? And like one of the things was like people were literally calling for the government to prevent people from actually trading real estate or like flipping or like doing anything
let's
that,
get into
making
this
money in real estate. And I was like, I was fucking shocked.
I do agree with them to some extent. But they're attacking the wrong people like we always talk about.
How do you, what do you mean you agree
Because
with them?
they should be able to afford a house. They should. If you're working a good job and if you make a decent wage in a G7 country, one of the wealthiest countries in the world, you should own a house. You should be able to own a house if you want.
But they actually don't.
But they're blaming landlords for the problem when really the problem is...
Or millionaires all the time.
The problem is the socialist government of Canada, which has screwed up our housing market. Yeah. And I don't want to argue about that. I just want to tell you as an investor how to take advantage of it. They realize what's happening and go buy the asset class that's in short supply with there's no fix on the horizon, by the way, because here's the only fix. You can't fix the supply issue. That's a decade or more away from being able to be fixed. If you were to just pump out houses for the next decade, maybe we would like get up to like an equilibrium. But the problem is it's too expensive to build now. The only way to fix it is really the demand issue. You'd have to hamper demand. The only way to hamper demand is basically to crash the economy. You'd have to destroy affordability for everybody across all spectrums. My bet is that the government's not willing to do that.
No.
Therefore, we have ourselves a crisis with no end in sight.
Yeah.
a crisis that the government created by mismanaging the economy and the housing sector. By the way, they haven't come out and said that they're going to slow immigration. Say, hey, we're going to protect our Canadian people. We got to get this housing market back in balance. We hear you, Canadian people. Yeah. We're going to go to fix it. No, they doubled down on their immigration target. Again, I'm not here to argue immigration. I don't care.
It just is what it is.
All I say is if you're going to bring in 400,000 people, then I'm going to go buy more real estate.
Yeah.
Because it's already in short supply. We're a decade behind catching up.
They got to live somewhere and they're not living on the street.
Yeah, and they're generally, a lot of people are educated and ready. They do contribute to our GDP.
Yeah, that's actually something that I was, made aware of. Where originally, I guess it's the refugee scenario that they'll come here and they're not really capable of contributing right off the bat, at least, right? But typically, with actual immigration, these people are like educated. They're willing to work. They want to work. They want to hit the economy running. Like this is not a scenario where they're coming here and leeching off us,
or they have a significant amount of money already, or their parents are rich, or they come as.
You have to it's actually what people actually don't really realize is it's actually harder to immigrate into Canada than the U.S.
That's actually harder. Surprising.
It actually is. There's a lot of boxes you got to check.
Well, because we're such an in-demand country, right? Yeah. And people love socialist policies.
If you were to tell somebody that in the U.S. saying like it's actually easier to immigrate into the U.S. than it is in Canada, they wouldn't. I guarantee you they wouldn't even believe you.
Yeah, I understand that. Where would you rather? We're more tolerant. Basically, our country's built on immigration. And I'm not arguing that. Like I said, I think it's a good thing in a lot of ways. Just understand the effects it has on the market.
Well, our parents
You step into a socially protected environment. You have healthcare. You don't have to worry about breaking your leg and going bankrupt and having to leave the US or whatever the case is, right? Yeah. I can see why Canada is in such demand, which again, when you think logically, we're going to have an infinite line of people wanting to get into the country. Just a matter of how many people the government wants to let in. You don't think people want to leave communist China or India where there's 1.5 billion people and poor governance and everywhere else across like we're one of the best countries in the world. As flawed as we are, because it's all relative.
It is.
Relatively, we're still one of the best countries.
You can't compare us to a utopia. It's relative.
It's relative to other really crappy countries, which are not even somehow crappy,
worse. Just even countries in general.
Yeah. But in a lot of ways, they're worse than us. As much as we complain about Canada, well, it's even worse over there, even though we don't like the direction of the country. So we're going to have an infinite line. Again, guys, just think logically. This is why you want to own real estate. I can't say the same things for certain stocks. Like there's arguments I can make for stocks, but like these are the reasons that real estate ownership in a G7 country like Canada and the US, by the way, is just budding like we theorize. Yeah. You want to own real estate in these countries because of these reasons and because of these government policies, which are so easy to profit off of. Yeah. All the while, most people are just complaining. And even investors are complaining instead of just profiting off of it, which it just doesn't do you any good.
Yeah. What people really need to realize is it's our they're calling for the government to help them when it's the government that's causing the issue.
Destroying
like people, please, like fucking understand this. You're calling for the government to step in and help you when it's literally the government creating the scenario here.
Yes.
And literally is.
Not only did they create it, they're perpetuating it. Look at their policies. Yeah. Look at their policies. They've done nothing to address this. In fact, they've done the
fucking
opposite.
Ignoring it.
Yes. So as an investor or an end user, own real estate in Canada. It's not going to get any better. It's not going to get any cheaper. It's not going to become some abundant supply where we oversupply of real estate. I don't think that's ever happened in Canada. I don't know. No. Maybe in some hyper local markets, like when Alberta's market crashed, for instance. But I don't think it's happened in Ontario.
Yeah, we've also seen like they heavily rely on one industry, right?
Yeah,
and that's actually what tanked Windsor in like the 2008 and 9 and all that stuff. It wasn't
hyper local.
Yeah, it was hyper local. It was not the mortgage
and again,
crisis.
The reason that Alberta's real estate market crash is because of government policy.
Yeah.
They shut the oil industry down.
Exactly.
Blame them. So if you're out west right now and you got smashed on your real estate portfolio or your personal home value, don't blame anybody else.
Yeah.
They shut down the oil industry and outsourced it to China and all these other countries. What do you think is going to happen? Oh, well, carbon this, carbon that. Well, if we're not producing the oil, somebody else is. Somebody's going to fill the market gap. You think China's following the Paris Accord? The Paris Accord considers China a developing country still. They're about to overtake the GDP of the US, the most powerful country arguably in the world. Yeah. And they're considered a developing country. So they can continue to skirt the CO2 rules.
Yeah.
So,
I'm sure it has to do something to the effect of like how much land mass they have per capita. Like maybe not even, because Canada has like the least populated land mass, right? Don't they?
Oh yeah,
don't we?
By far.
Yeah.
By far.
So that's probably not even the case.
We're the second largest country in the world, and we have 37 million people.
So how are we? Like, how are they still considered an undeveloped country? That's insane.
It's just it's politics. It's politics, right? Everybody sells out to China because the corporations are willing to sell to China. I understand why. You want to go to the Chinese market. You have 1 billion people to sell to, and there's a lot of wealth there. Yeah. So because of politics, they'll sell it to China. They'll bend to China's will. There you go. Right. Yeah. For dollars and cents. Now, at the same time, the middle class and poor are getting absolutely burned in your own country. Now, I don't care to argue about this, but just understand it. Yeah. Understand when it happens, because there's going to be shifts in politics and policies. There's always shifts. Just start to understand them and think about them, and don't complain about them. Just, okay, they're doing this, whatever, nothing I can do. What am I going to do? Go pick it in the street? It's not going to do any good. They control the media. They control everything. It's not going to change. Where do I start investing then? How do I take advantage of this? It's really all you can do. Yeah. In my opinion. So to wrap up, what are the advantages of owning real estate over stocks? 5-to-1 leverage, risk-adjusted, double-digit return on investment, annually 25% plus, pretty easily, with even minimal appreciation. Yeah. It's on the Maslow's hierarchy of needs. In Canada specifically, in Ontario specifically, and Windsor specifically, we have a severe shortage of housing. With building costs rising and inflation and et cetera, we have no hope of fixing that anytime soon. And then simply put, inflation and population growth will necessarily make real estate values higher over a 100-year period. Again, I don't care what happens in 2 or 3. Over 100 years, because of inflation and population growth. If you're going to bet against inflation and population growth, go put your money in a mattress, because you just don't understand. Yeah. You don't understand economics. You don't understand
saving for the next crash. You're fucking yourself up so bad.
You've been doing that, and you're continuing to do that. I mean, stop trying to predict black swan events. Yeah, you have more control if you're a good operator. If you're a good operator, business operator, which I like to call it. It's not an investment to me, but if you're a good business operator, you can force there's so many things to make so much more money on real estate. You can't. It's hard to buy a stock at a 50% discount because it's so liquid and trades so easy. But you can buy real estate a lot of times because you have a lot of ignorant owners, a lot of ignorant agents that don't know the market, or a dilapidated property. Like there's ways to get heavy discounts in real estate as well. Like, and then go in and do the work to bring it up to market value or exceed market value. Here's another thing. The opportunity to refinance your property tax-free is insane. And you need to understand this, because I knew it, but I didn't understand it until I started doing it. So anybody that's a beginner, understand this. You can end up, over time, you will end up having infinite returns in your property, because eventually over time, whether it takes 5 years, 10 years, or 2 years to get enough appreciation to pull all your equity out, right, with an 80% loan to value, you're going to have $0 left in that property. So any returns are now infinite. And you take your capital and you go buy another one. So you can scale real estate you can't scale stocks.
No.
You can scale real estate.
That's one thing that we actually missed.
We did miss that.
Is the scalability of real estate.
We should take this and cut it into the previous.
Dave, cut this and put it in.
Seriously, this is huge.
Yeah.
This is huge. You can't scale your stock portfolio without taking on insane risk. You can scale real estate in the way that we just talked about.
Yeah, very easily, actually.
It's almost. And this is one of my favorite quotes as well. It's very hard to get rich in the stock market. It's very hard not to get rich in real estate. If you consistently purchase real estate over a long period of time, you will be wealthy. Like you will have financial freedom. It's inevitable. One property a year for 20 years, financial freedom guaranteed in Canada.
Yeah.
I can't say that you buy one stock a year, put 20 grand in one stock a year for 20 years. I'm not guaranteeing anything. You might make some money. You might double or triple your money or something like that. But that's not enough for financial freedom.
No.
You don't have the triple header of principal pay down, cash flow, and appreciation, all leveraged 5-to-1 in the safest asset class in the world, and the ability to refinance your money out, put that money to work, have an infinite return in all your properties over time. Like it's insane. So start buying real estate. Stop waiting. I don't know what else to say.
Done.
Trigger.